Penny stocks, options, and futures. What are some pros and cons of trading them? Let's talk about it.
Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you. Come along and see it's true, but the world is pretty cold. You might.
What's going on, YouTube? It's your boy Blue, and today's video is gonna be some pros and cons of trading penny stocks, options, and futures. So we're gonna get into these penny stocks first, and I'm gonna tell y'all some of the pros that I found out for myself on what I think are the good. So with penny stocks, they're low cost. Everybody knows that. That's the biggest reason everybody seems to get into them, because of the cost of them. You can get a lot of shares and try to make a big profit in a short amount of time. Also, you can get big moves out of penny stocks in one day, sometimes hundreds of percentage in one day. Now, you don't see that a whole lot, but they happen. So you can make a lot of money trading penny stocks up or down if you have some kind of plan on how to trade them. Now let's get to some cons. Penny stocks can have some slow days or days where they barely even move, especially during the summer months. And if you don't recognize them, you can get yourself in a world of trouble real quick and even blow up your account. Penny stocks also can be hard to get in and out of position if the float is low and there's no volume, especially for today, or if you get into something that's so small, like those 0.00s, you can get stuck to where you can't even sell your shares because there's nobody to even buy them. You can always buy shares. You can buy them from any stock, but you may not be able to get out of your position. Sometimes it can be a little hard to control your risk, especially if the market is moving fast. If you don't have hotkeys, can enter and exit orders fast, you can end up blowing up an account just off of the move and the margin that you have to use to be able to trade those penny stocks. If a stock has a lot of volume in penny stocks, it can make it extremely difficult to short the stock, which, if you don't know what shorting is when the market is going down and you trading basically that direction and making money while the market is going down. Also, you have to worry about PDT, the pattern day trader rule, which you can only take 3 trades within a rolling 7-day period. So if you take 2 trades on Monday, that means you only have 1 more trade left to trade until the next Monday. So the PDT is something that a lot of traders have a hard time dealing with, especially if you don't have an account over $25,000. Otherwise, you have to either trade a cash account, which means you can't get a lot of shares, or you have to go with a broker that's somewhere out of the country, some shady broker or something, where you don't even know where your money's at. And that's kind of risky. So if you decide to go with one of those type of brokers, make sure you only put a little bit of money in there, money that you're comfortable with losing. Because if that broker goes out of business, they take your money right along with it, and it's not protected. Also, if you put money into an offshore broker, if you so happen to be able to start building your account up, make sure you're doing withdrawals consistently so that you don't leave a lot of money in those accounts. And last but not least, what I have for penny stocks is the halts. If the market is going up too fast or down too fast, that stock and penny stocks tend to get halted more. Yeah, all stocks can get halted, but it has to drop a certain percentage within a certain time frame. And penny stocks tend to do that whenever a lot of people get into trading them. So they get halted more. And if you don't know how to get in and out of those halts, then you can get stuck in a bad position and even blow up your account. So those are some of the cons and pros of trading penny stocks that I found. Now let's get into some of these pros of trading options. Just like penny stocks, options are low cost. You can get options that are expensive, but for the most part, a lot of the options you may be trading are low cost. Also, just like penny stocks, options can have big moves to the upside or downside, depending on which side you're on, and can make you a lot of money in a short period of time. They can move up 100% or even 1,000%, or down 100% or even 1,000%. With options, you can narrow down what you trade inside of stocks. So if you want to trade only a certain basket of stocks like Netflix, Amazon, Tesla, Nvidia, SQ, Apple, and those are just the stocks that you want to trade, you can focus only on trading those stocks and don't even have to worry about the rest of the market. That way you can check only on the news on those, and that's all you have to really worry about. So you have that certain basket that you consistently trade in. Just like with narrowing that basket, it's a good thing because you can trade stocks that aren't going anywhere, stocks that are consistent and have been established as big name companies with billions of can be billions of shares. It's very easy to control your risk inside of trading options. Some people do it where they put too much money in. You can also blow up your account if you put too much money in. But it's easier to control your risk with options because if you're only planning on losing $100, then that's all you have to put in is $100. You can buy one contract of Netflix that expires on a Friday and you buy it on Monday, and you can just hold that one contract for the whole week, and all you're gonna lose is the $100 that you put in. But you can also make a lot more. If that $100 starts to dwindle down by the end of the week, and then all of a sudden Netflix has this big move to the upside or the downside, depending on which side you on, your money can come right back. So you can risk. It's better for risk management if you don't know what you're doing, then you may get smoked in it. Also, there's no PDT with trading options. With trading options, you can have a $5,000 account and buy $5,000 worth of options in one day and sell them all within that same day. And by the next day, your $5,000 is right back in your account. So you don't have to worry about the PDT rule of being locked out your account if you overtrade or something like that. You also don't have to worry about whether doing borrows the short in options, because you can play both sides of trading options. You either can buy calls if you believe the market is going up, or you can buy puts if you believe the market is going down, which is considered directional trading. So those are the pros that I have for trading options. Now, some of the cons of trading options are they can be a little more complicated when it comes to planning out an exit strategy if you have too many contracts or you want to set an exit. Yeah, you could set a cash exit if you want to, but as far as using your chart to try to set an exit, that's kind of harder because of the Greeks. And that's another con of trading options. If you don't understand the Greeks, then it can be a big problem with trading them, which isn't that hard of a thing to learn. But once you learn them, it makes it a lot easier. But the Greeks can also lose you money if you trade them at the wrong time and you don't know what theta is, which chews up your option. So those are basically the only cons that I have as far as trading options. So let's get into these futures. So some of the pros of trading futures, which I'm not talking about the regular futures like the ES or the NASDAQ 100. I'm talking about the micros, the MNQ and the MES, micro E-minis. Trading those, some of the pros are they are low cost. So say, I'm not going through all that tech stuff and everything. If you trade the micro E-minis, every dollar that it moves is a $5 move. So if you buy a contract for $33.50, if it goes up to $33.51, then you made $5. It's $5 for every contract or for every point that it moves. That's the easiest way to understand it. So basically you can get them for a low cost. It's $50 to enter for one contract. For every contract, it will be $50. So it's low cost and you can get as many contracts as you want. The only downside is they don't expire like options, but they're still low cost. They can also have big moves, moving 10, 20, 30, 40, 50 points. So if you buy one contract and it moves 20 points, you just made $100. Now, if you're buying more contracts, you just multiply that. So they can have big moves and you can make significant amount of money, but you can also lose significant amount of money if you don't have some kind of risk management in place to where you know where you want to get out. With trading the micros, you really narrow down what you trade in your trading vehicle. So you can trade only two, you can have two in your basket, like me, like the MNQ and the MES, which most of the time I trade the MES, the micro E-minis. That's what I stick to, and you don't even have to look around the market. You just can get up, check to see if anything big has happened in the news, and get to trading the futures contracts. You don't have to worry about the Greeks like in options, so you don't have to worry about theta chewing up your profits or theta eating away at what you have in there if you want to swing trade it or leave the trade on. And they trade 23 hours a day, or 23 and a half hours a day, 5 days a week. So you have all day where you can get in and out. You don't have to worry about the market closing to where you can't even get out of your trade if you want to swing it. Controlling risk is a lot easier because you don't have those big gaps within the bid ask to where if it goes and you're against you, you can't get out at the price that you want to. You can get out at exactly the price that you want to, because the futures market doesn't dump out like a penny stock will and blow through your stop. So it's easy to control your risk and know where you want to get out, and you can have, like, if you know that you want to take it off at a certain resistance, you can put in that resistance to take it off, and you won't have any kind of problem with getting out that trade. And the best thing about trading futures is there's no PDT. Just like options, there's no PDT. But with options, you only can trade what's in your account cash, and you can only trade it once that day. So if you have $1,000 account, you can only trade that $1,000 that day. You have to wait till the next day. With futures, if you make some money in futures, you can continue trading the money that you have in there as long as you want, until that money is gone, which I wouldn't say do that, but you can keep trading over and over again. So with that, there's really no PDT in place to stop you from trading. Now, the cons of trading the micros is, I actually don't know because I haven't really found any. So if y'all know some, then please drop them down in the comment so that your boy can know what the heck is some cons to trading the micro E-minis or any of the micros. So with that said, those are the pros and cons that I could find as far as trading penny stocks, options, and futures. If y'all like my content, hit the thumbs up for me and subscribe to my channel. And we'll be back at this when the market opens for these trades. Deuces.